Good. Let me welcome you to our today's session. We are going to be tackling budgeting and budgetary control. I remember that under the analysis of the budgeting, we know very well that a budget is just a financial statement which is used to project the expected revenue. We normally project our cash flows, we project our sales. We are going also to be projecting our liabilities, and also we have to be checking on our assets. So basically, when we are going to be analyzing our budget, we have to be factoring out some of the things that we need to be achieving during the current financial year. So the budgets are normally prepared at the beginning of the accounting period to project the expected performance. So when we look at it, we are going to be finding that we normally have 4 types, right? Types of budgets. Types of budgets, we normally have only 4. The first one, we normally look on the functional budgets. Functional budgets, right? We normally have the functional budgets. 2, we normally have cash budgets. Number 2, we normally have cash budgets. Number 3, we normally have flexible and fixed budgets. Then number 4, right? Number 4, we normally have master budgets. We normally have master budgets. Kuna ile budget muli prepare pale mukasema the new resolutions during the current year, the current year 2023. Do you think they fall within our types of budget which we are preparing today? Now, we can be able to say that they are going to be lying under the functional budgets, since when we are looking on the aspect of the functional budget, we know very well that these are the budget prepared by different departments, right? So we are saying these are budgets prepared. They are the budget prepared by different departments. They are normally prepared by different departments in an organization. So they are normally prepared by different departments within the organizations. And in this case, what is the purpose of preparing this budget? We are saying each department is expected to draft its own budgets. And then once we project it, we are going to be forwarding it to the top management for approval. So it means that if it is an accounting department, just to prepare their budgets, procurement, they prepare their budgets, HR, human resource, they prepare their budget and so on and so forth. So it means that each department is supposed to be preparing their own budgets, and then these budgets we are going to be forwarding to the top management for approval. Now, this budget normally includes, right? These budgets includes, they normally include, number 1, we normally talk about sales budgets. They include sales budgets. Number 2, we normally look at the production budgets. Production budgets. Number 3, we normally talk about the material usage. The material usage budgets. We normally discuss about number 4. We talk about the material purchase, the purchase budgets, among other budgets. We can also talk about number 5, where we are going to be discussing about labor budgets, labor costs budget, among other types of budgets, which you have to be preparing under that environment. A minute, please. Thank you. Let us continue. We were discussing about these types of budgets, and we have already analyzed the functional budgets, where we have already talked about some of the budgets which are normally prepared by the departmentals within the organizations. And I have said they normally include the sales budget, production, material usage, material purchase. We are discussing about the labor costs among other types of budgets. So in this case, I just want to show you how to prepare this type of budgets. And we are going to be doing our illustrations. We start with May 2017. And also once I finish it, I give you an illustration, an assignment, sorry. So May 2017, we have a question in May 2017, question number 5B. May 2017, question 5B. Let us go there. And we look on now, how am I supposed to be preparing the sales budget, production budget, material usage, material purchase, and then we also have the labor cost budget. So let us go there. Grace will be reading for us right now. So we are starting with I have said we start with 2017, May. May 2017, question 5A. Grace?
Maramat Limited manufactures a single product branded PQ. The budgeted sales for the month of June 2017 amount to 10,000 units at selling price of 2,000 shillings per unit. Additional information: 1 unit of PQ requires 2 components, namely X and Y, as follows. Component X are 5 with unit cost of each component 20 shillings. X, there are 3. Unit cost of each component is 10 shillings. Stocks at the beginning of the month are budgeted as follows: 4,000 units of finished goods at a unit cost of 1,050 shillings. Component X, 16,000 units at a unit cost of 20 shillings. Component Y, 9,600 units at a unit cost of 10 shillings. Production cost of each unit requires the following labor hours. Departments, there are 2 departments, production and finishing. For production, 4 hours per unit. Labor rate per hour is 100 shillings. Finishing 2 hours per unit, 400. The labor rate per hour is 140 shillings. Sorry. Factory overhead is absorbed into unit cost on the basis of direct labor hours. The budgeted overhead for the month is 1,920,000. Administration, selling, and distribution overheads for the month are budgeted at 5,500,000 shillings. The company plans a reduction of 50% in quantity of finished goods at the end of the month and an increase of 25% in the quantity of each input component required. For the month of June 2017, sales budget, production quantity budget, material usage budget, material purchase budget, direct labor budget, and budgeted profit and loss account.
Very good. Thank you, Grace. You can see we are being given a very good question there, where the examiner is asking us to prepare the sales budget. We have the production quantity budget. We also have the material usage, material purchase, direct labor, and the budgeted profit and loss accounts. Now, I want to compare one of the secrets of passing these exams. Now, you know very well that if you are able to fail in any one of these stages, then it means you are going to be failing the whole question. But that is not our case here. I know that we will be able to understand the concept very well. Now, when we start with the sales budget, it's not something that is hard. This is what we are supposed to be doing when we are discussing about the sales budget. So how am I going to be doing this? It is very simple. I just say, I know very well to get our revenue, right? To get my revenue, what am I supposed to be getting? Let us look on the projected units sold. Units sold. Then we multiply by the selling price. We multiply by the selling price, right? So how much is the unit sold? When I look on my question there, I've been told very well that, let me see where the question started. I've been told Maramat Limited manufactures a single product branded PQ, but the budgeted sales for the month of June 2017 amount to 10,000 units. So already the units sold, we have been told will be 10,000 units. Then we have been told at a selling price of 2,000 per unit, you multiply by 2,000. So this translates to Kenya shillings, right? 20 million. 20 million. Already, nishamalizana na sales budget. That is the requirement number one. Sales budget. You're part of sales budget. Very simple. I just look on the unit that we want to sell. Then we multiply by the projected selling price. Number two, I can see the production. The examiner is asking you about the production. The production, let me look at it. He is asking about the production quantity budgets. Right? The production quantity budgets. Well, ukiangalia things that we have been doing under the concept that you have been doing under the preparation of the financial statements, we know very well that the production in other cases becomes our purchases. And that is what we are going to be checking when we are doing the marginal and absorption. So in this case, we say, if I need to get my production, I'm going to be taking my sales, right? Plus closing stock, right? Then we minus opening stock. So in this case, remember we are dealing with units. Examiner is telling me my sales units amounts to 10,000, right? Then remember these are the finished products, right? These are the finished products. So in this case, we have been told very well that in the additional information somewhere, let me check. In the additional information number 6, right? We have been told very well, is it number 6? Yes. The company plans a reduction of 50% in quantity of finished goods at the end of the month. So it will be 50% of the what? What is our opening? When you look on note number 2, additional number 2, we have been told that the stocks of at the beginning of the month are as follows. So we have been given the closing stock of the finished products, and also a big given the closing stock of the opening stock of the materials. So in this case, we say add closing stock. I had the closing stock. Then we are going to less opening stock. So already I know the opening stock of the finished goods are being given 4,000. 4,000, right? And then the closing stock we have been told will be 50% of the opening stock of 4,000. This translates to 2,000. Translate to 2,000. I think here you are able to understand. There will be a reduction of the finished goods at the end of the month. So it will be 50% of the opening stock, right? So how many units were produced? And in this case, it will be easy for you. So here you just talk about the units produced. So the units produced will be, I can see, will be 8,000 units. 8,000 units. 8,000 units. Then number 3, I can see the examiner is asking us something very simple. He's talking about the material usage budget. The material usage budget. The material usage budget, right? We are using this material to produce what? We are using this material to produce what? When I look on the question, there are two components we are producing. We are producing component X, and then we have component Y. We are producing only two components. So in this case, you normally come and you factor the material produced, right? You normally come straight away and you look on the material produced. Here you start by talking about the units produced. So I'm going to the units produced. So every time we want to produce, we are going to be using 8,000. We're going to make up 8,000 and also on the other end 8,000, right? Without kutengeneza X, utatumia 8,000 units. Without kutengeneza Y, utatumia 8,000 units. Ndio. Then when I look on that additional information number 1, we are being told, hapo naona tumeambiwa hivi. 1 unit of PQ requires 2 components, namely X and Y as follows. So I can say we have component X and Y given, and then we are given the numbers, right? It's just like you are being told 1 unit requires 5 components of X, right? Wewe ukijiuliza, what about 8,000? So you can multiply 8,000 units. So ukiona mwalimu hapa akifanya namna hii, mimi nakuja hapa direct na multiply namna hii. Hapa ni multiply by 5 na hapa ni multiply by 3. Hapa napata the components required, the component that I require, right? The component which I require. Hapa I require 40,000, and also here will be 24,000. 40,000, 24,000 there, right? Because already I know 1 unit requires 5 components of X. What about the 8,000 units? We'll be requiring 40,000. I think up to that point we are okay, right? We are good to that point. Then number 3 or number 4 now. Hii imeisha. Kuna kitu kingine inahitajika hapo. Number 4, we are talking about the material purchase budgets. The material purchase budgets. The material purchase budget there. Tunatumia nini kununua hizi materials, right? So hapo unakuja unaniambia mwalimu, we are only making 2 components, X and Y. So utakuja hapo uniambie, let us look on the material used. Material used. Uniambie X tumetumia 40,000. Y we are using 24,000. Now remember, these are the materials. Now we add closing stock. Then hatuna, lakini tumepewa somewhere. And not. Then we less our opening stock. Our opening stock, we can get additional information too. I've been told there is component X. Those are the opening stock. I can see 16,000 units for X. So hapa naeka 16,000 of X. Then hapa nimepewa 9,000. Right, hapo nimepewa 9,000. But additional number 6 inanisaidia sana kupata the closing stock. I've been told the company plans a reduction of 50% hiyo tulitumia up to the end of the month, but there will be an increase of 25% in the quantity of each input component. So naambiwa hapa the opening stock will increase by 25%, right? So hapo nakuja tu unaniambia 125% of 16,000. 125% of 16,000. Yes?
Excuse, it should be 9,600, not 9,000.
Thank you. It should be 9,600. Thank you. 9,600, that is okay. So 125% of 16,000 is how much? 1.25 times 16,000. I'm getting 20,000 here. And also 1.25 times 9,600. I'm getting 12,000. 12,000, right? How much are we getting there? How much? So in this case, I just say, let us look on our purchases. Because these are the purchases. The purchases. So it will be 60,000 minus 16,000. Getting 44,000 units. 44,000 units. Then on the other side, we have 24,000 plus 12,000 minus 9,600. I'm getting 26,400. 26,400 units. 26,400 units. That is how you are calculating the material purchase budgets. The material purchase budget. Then I can see we have another requirement, which is requesting us to do the direct labor budget. Number 5. Direct labor. The direct labor budget, right? The direct labor budget. Sindio? Tunatumia hii labor kufanyia nini? Unakuja hapo unaniambia labor tunatumia during the production and when we are doing finishing. Na iko pale kwa swali, sijabuni vitu zangu, right? So which units are we using? Unakuja hapo unaniambia tunatumia the units produced. 8,000 zinatumika through the production and those zinafanyiwa finishing, right? Then examiner nakwambia vizuri pale kwa additional information number 3, the production cost of each unit require the following labor hours, right? So for production unit moja ina require 4, I just multiply here, then hapa ina require 2. So hapa it translates to that 2,000 na hapa tunapewa 16,000. Right? 16,000 there. That's 2,000, 16,000. Senior. Then remember these are the total hours required. These are hours. Ukitaka ku convert into shillings, naona examiner amekwambia 1 hour requires 100 for under the production. So hapo na multiply to 100, then hapo na multiply na 120. So in this case we are getting 3.2 million. On the other end we are getting how much? 16,000 times 16,000 times 120, getting 20,000. Now remember these are in Kenya shillings. In Kenya shillings. That is how you do those questions. Let us do the last part. You can see the examiner is asking you to do what? The examiner is asking you to do a preparation of the budgeted profits. Right? To do a budgeted profit would be easy for you because I know already we understand how we are supposed to be doing our budgets. So this one will not be hard for us. So nikuja hapa niambiwa nitengeneze budgeted profits. Haitakuwa ngumu kwangu. Nakuja tunakuwa na 2 columns of Kenya shillings here. So hapa nakuja nasema, let us start by taking our sales under consideration. So sales zetu ni ngapi? Unaniambia ni 20 million. Right? Then we less sales less cost of sales. We start with opening stock. We have the opening stock of the material. Tumepewa pale na examiner, right? The opening stock of the materials, right? Of the finished goods, sorry. Umepewa 4,000. Then you multiply by the cost ametupea hapo ya 1050. So 4,000 times your 1050 na ndio tunatumia yote for the cost of sales. Hapo unapata 4.2 million. Right? Tuende kwa production. Through the production, we have said we are producing 8,000 units. We are using the same cost times 1050, right? 8,000 times 1050, getting 8.4 million. Good. Then we less our closing stock. Our closing stock ilikuwa ngapi? Our closing stock of the finished goods. Niliona ilikuwa 2,000. Our closing stock of the finished goods, tulipata 2,000 pale tukitafuta units produced times 1050, right? 2,000 times 1050, we are getting 2.1 million. So cost of goods yako ni ngapi? 4,200 plus 8,400 minus 2,100. I'm getting 10,500. So let me subtract there to get my gross profits. So my gross profit will be how much? 20,000 minus my answer. I'm getting 9.5 million. 9.5 million. Let us less allowable expenses. Allowable expenses. Allowable expense naona pale ni moja. Kwa additional information. I've been told that under the point number 5, administration, selling, and distribution overheads of the for for the month are budgeted as 5.5 million. So admin, naambiwa selling and distribution will be 5.5 million. Na tuna kitu ingine hapa, get your net profits. Hapo unakuja unaniambia get my net profit mwalimu. Our net profits will be 4 million. Grace, uko na swali? Grace?
No question.
No question, very good. That is how you prepare your budgeted profits. But siku hizi hawajaleta hii part. Wanaletanga wanafika hapa, right? Wanawaogopa, wanasema we don't want to test the budgeted profit. But ikikuja kwa mtihani now, you know how you are supposed to be preparing it. Don't forget how you are going to be taking the consideration of this. This one is already given in the additional information. 1050 is given there. Hakuna kitu yangu nimebuni kwa hiyo. Now, when you go to the past paper now, when you also go to the September 2021, wameleta your question the way it is, right? And that is why I want to give the first assignment of the night. So assignments in that regard, they have already, the wameleta your story the way it is. September 2021, question number 4B. September 2021, question number 4B, right? There are students who I have never seen their assignments. I hope we are going to be smiling, all of us, at the end of the tunnel, right? So, kuna watu sijawahi ona assignments. So, sijui wanangoja wasome lini. Hata mwalimu anasoma na anawafunza na anafanya assignments. So, kazi tuna balance kidogo kidogo tunasoma. Because masomo is very important. Now, let us do another thing. After the sales budget, we can be able to shift our gears to something different. And I will be able to do, because I have already given you the assignment for functional budgets, I feel it is good for me to do some cash budgets. Cash budgets here. Number 2, the second type of budgets, cash budgets. Cash budget there. Cash budgets. And cash budget is very simple, right? Because basically it requires you to have some concentration. It is just a type of budget. It is a budget. It is a budget. We have said it is a budget, which shows it is a budget which shows the cash flows expected, the cash flows expected. It is the budget which shows the cash flows expected by an organization. Cash flows expected by an organization. We are saying, and this is the thing that you're supposed to be avoiding when you're preparing your cash budget, we are saying that non-cash items such as depreciation, non-cash items such as depreciation are normally excluded in the budgets. Are normally excluded in the budget. Are normally excluded in the budgets. Now, any activities which need the payment in cash, right? Any activity which needs the payment in cash or any cash receipt must be taken into account. I have said any activity which needs payments, which needs the payment in cash, right? Which needs the payment in cash or any cash receipts, should be taken into account. Or the transactions which are carried out outside the budget should be excluded. So when we are preparing our budgets here, we are looking on two things. we are looking on a product which I'm going to be purchasing, right? Incurring the cost, where we are discussing about the cash inflow and the cash outflows. So already I have to go and incur some cash. I buy a certain product. Then I will be able to add my markup, and then I'm going to be selling that product at a profit. So those are the things that we are discussing about. That is where we have said such things, just like depreciation, these are not the things that will not be able to bring any income to the organization, are going to be excluded from your analysis when you are doing your cash budget. Sitaki kuongea sana. Tuangalie how are we preparing our cash budget. Then we go straight away, December 2021. Question number 4B. December 2021, question 4B. December 2021, question 4B. Twende hapo. And I will be able to do another question, by the way, for these cash budgets. I will do one at the end of our class. So let us go to that period. I've talked about December 2021, question 4B. We should read for us today, Jackson. Jackson to read for us right now.
You are in a charge of making forecasts and preparing budgets for Cordell Limited. You have been supplied with the following costs and the revenue forecasts and the details of payments. Forecast for revenue and costs for half year 2022. There's January, February, March, April, May, June. Direct material purchases, wages, overheads, production, administrative, selling and distribution, sales. Additional information. Cash balance on 1st April 2022 is expected to be 9 million shillings. Period of credit allowed by suppliers averages 2 months. Debentures worth 1.5 million shillings are expected to be issued in May 2022, and the amount will be received in the same month. A new machine will be installed in March 2022 at a cost of 150 million shillings, and payment is expected in May 2022. Sales commission is of 3% is payable after 1 month of sale. A dividend of 100 million shillings is to be paid in June 2022. There is a delay of 1 month in the payment of overheads and wages. 20% of the debtors pay cash, receiving a cash discount of 4%, and 70% of debtors pay within 1 month and receive 2.5% discount, while the remaining debtors pay within 2 months without a discount. Required a cash budget on a monthly basis for the months of April 2022 to June 2022.
You can see we have the examiner just asking us for a certain quarter, April, May, June, but the analysis should be carried for the whole periods. Now, when you're doing your question, just focus on certain points like point number 8. They become your a base for your analysis. Remember, examiner is telling you that for the sales which have already been made, you have to be determining the receipts for those periods. He is asking you to prepare the cash budget. You can't be able to prepare the cash budget with the money that you don't have. So in this case, I have to be relying on the money that I have already collected. You cannot be able to budget for something that you don't have. Now, how am I going to be doing this question? Let me go back to my board and I'll be able to show you how this question should be sorted. Now, remember, the question is given like this. I'm being given for January. Let me write it here. We have Jan, I have Feb, I have March, right? We have April, we have May, and then we have June. We have June there, right? Then we are given some cells down there. Examiner has given you cells, which I have to analyze. For January, he has given you 360,000, right? Then for the February he has given you 350,000. March, examiner has given you 440,000. Right? We have April, where we have 350,000. Right? We have May. May we have 360. Then we have June, where we have 360,000. After ushaandika swali yako namna hii, go back to note number 8. Go back to note number 8 and you do your analysis. Do your analysis there. Do your analysis there. Can you hear me? Hello?
Hello?
Okay. I think my board is not okay. So look for, let me restart a minute. So let us go to note number 8 and we do our analysis. I've been told there, I've been told by the examiner there that there are certain customers who are making their payments. Let me open my question, please. Good, thank you. A few challenges here and there. So we have been told, under note number 8, 20% of the debtors pay cash. So in this case, I just come and I say, there are those debtors who are making, let me call them cash debtors. We have been told they are 20%, right? 20% of these debtors pay cash and they receive a discount of 4%. So it means they normally pay at which proportion? 96%. Right? 96% is coming from where? Because these customers, they don't pay 100%. They normally pay at 96%. Since they pay cash, they are normally given a discount of 4%. They are given a discount of 4%. So kama utaki kazi mingi, you just combine these two proportions. You just have one proportion. I just say 0.2 times 0.96. I'm getting 19.2%. 19.2%. Then I start doing my computation. Out of the 360,000, 20% of these customers pay at cash and receive a discount of 96%. How much do I have? So in this case, I just multiply by 360,000, 0.192. I multiply by 360,000, getting 69,120. We go to 350, getting 67,200. Right, we go to 440, getting 84,480. The other one we have 350, and we are able to get 67,200. The other one we are getting 69,120. Then the last one is 69,120. Then we continue with the statement. We have been told after the 20% where they receive 4% of the discount, we have been told and 70% of the debtors pay within 1 month and receive 2.5%. So we have other debtors, right? Who are 70%, they pay at which proportion? So if you take 100 minus 2.5, then they pay at 97.5%. Because they are given a discount of 2.5%. So how much is this? So we say 0.7, we multiply by 0.975. I'm getting 0.6825%. So 0.6825, I multiply with the sales now. 360,000, unajua inamaanisha Cleophas amechukua goods leo, but alipi leo, but anapaswa kulipa within the month of February. That is unaona nitaifanya kwa kila mwezi. That is what that examiner means. So the first one will be 245,700, right? The second one we are discussing about 350, getting 238,875. Then we have 440, getting 300, right? But when you look on the 350, we have said is 238,875. Here we are discussing about 245,700, 245,700, 245,700. Now, after this one, we are also being told in the question, right? While the remaining debtors pay within 2 months without a discount. So who are the remaining? Remember already we shall find for 90%, 20% plus 70%. The remaining debtors need 10%. Now wapatangi discount, but wanapaswa kulipa within 2 months, within 60 days, right? Not after 60 days, but within. So inamaanisha deni ya Januari huyu mtu atalipa lini? Unakuja unaniambia deni ya Januari huyu mtu atalipa February 36,000. 36,000 inatoka wapi? 10% of this 36,000, right? Then 10% of 350 getting 35,000. Atalipa March within 2 months. Now the other one will be 44,000. In is at 5,000. Then this one is at 6,000. Hiyo ingine atalipa July, which is not part of our analysis. So in this case, just ask yourself, examiner alikuwa anataka utafute for 3 months, right? April, May, June. And in this case, you need to be determining your receipt. This is zako ni ngapi. Usiniambie mwalimu tuanze kuadd kutoka kwa 350 hapana. Hizi ndio umeanalyze, you are not adding those ones. So we start from 67,200. Na hizi zingine waachana nazo zilikuwa zinatusaidia kupata the others. So 67,200 plus 238, right? 875 plus 44,000. And I'm getting 350, 075. The second one will be 69,120 plus 245,700 plus 35,000. Getting 349, right? 820. Then the last one will be 69,120 plus 245,700 plus that 6,000. And here I'm getting 350,820. Ushamaliza kufanya hivyo, shamaliza hiyo analysis. Na kuna additional information nyingine nataka any other analysis. Kitu yote utaiona na proportions kama hii, wachana hiyo ya sale commissions hapo. Yenye iko na too much analysis like this, you need to be doing your work fast. Now let us go straight away and start our cash budget. That was just to get the receipts, was just part of the working. Now we have April, we have May, then the last one I've been told is June, right? So swali yangu itaanza na nini? Nimeona pale examiner ametuambia vizuri under the additional information number 1 that the opening balance is, right? The opening balance for the month of April. Ametupea ngapi? The cash balance on 1st April was expected to be 90 million. So hapa you reduce just your shillings to thousands. Na hapo unakuja unaniambia, let us start with the opening cash balance. So our opening cash balance tumepewa 90,000. Right? Copy your receipt. Ni kama you are grouping your revenues. The receipt, nimeona nimepata ya kwanza, 350,075. The other one will be 349,820. Then the last one will be 350,820. Right? Niangalia whether we have any other income from the additional information. Yes. I can see under the additional information number 3, the debentures worth 105 million are expected to be issued in May 2022, and the amount will be received in the same month. Ukuja hapo niambie, tuko na debentures. So debentures to receive lini, tumeambiwa zitareceiviwa in the same month, in the month of May, 125,000. Hapo hakuna. So let me get the total of my revenue, but nita add to ya kwanza, ndio niko na opening cash balance. So this will be equivalent to 440,075. 440,075. Now, let us factor our payments now. We start with the payments, and we start with the additional information too. We have been told, period of credit allowed by suppliers averages 2 months. Averages 2 months. So niambiwe, hii purchase, material purchase ya January italipwa lini? Material purchase ya January italipwa lini? Material purchase ya 112 will be paid when? Mimi naona nitalipa March. Because nimepewa a net of 60. Right? After 60 days, I have to be making my payment. So it means, when I look on the materials for the month of February, italipo April. Nakuja hapa nasema materials. Right? The materials of February, zitalipo the 3rd month, equivalent to 100,000. Right? 100,000. Then, kuna materials za 135,000, which will be paid in the month of May. Nakuja naandika hapo 135,000. Right? Then also I've been told that the materials are April ndio tutalipa June za 90,000. The 90,000. Toka hapo. Twende next. Debenture umemalizana nayo. Note number 4, we have been told a new machine will be installed in the March 2022 at a cost of 150 million. And the payment is expected in May 2022. So in this case, unakuja hapo unaniambia tuko na installation of the new machine. Right? The new machine italipwa lini? May. Hapo unakuja unaniambia equivalence to how much? Naona pale tumeambiwa ni 150,000. 150. Unatoa hapo 150. Then after the new machine, we go to number 4, not number 5, where we have been told we have to be paying sales commission at the rate of 3%. So it will be 3% of what? The respective sales on this month which you are preparing your cash budget. For example, 3% of 350,000. 3% of 350. Unapeana sales commission yake. So in this case, I just say 0.03 times 350,000. Hizo ndio sales a month of April. Whether you use on credit ama uko na cash, lazima upeane sales commission. Right? As long as it is recognized as a sale. Here we are discussing about 10,500. Right? The next one will be 360. 10,800. 10,800. 10,800. 10,800. That is the commission. Commission unalipa ile mwezi uliuza hizo goods. Whether they were on credit, or not.
Excuse.
Yes.
I have a question. They're saying the sales commission of 3% is payable after 1 month of sale. So is it the next month or you pay the same month you've sold the goods?
The sales are paid in the next month. Very good. So it means it should be 3% of 440. 3% of 440 will be paid in April. Thank you for that. Thank you. Thank you. Yeah, it should be like that. Thank you. So sales are the March talipwa April, it will be 3% times 440, getting 13,200. Right? Okay, very good. Then here we discuss about 10,800. Is it 10,800? Let me check. 10,500. So 0.03 times 350. 10,500. Then this one should be 10,800. Thank you. Thank you so much. It should be looking like that. So in a manisha sales hapa zinalipwa hapa, and then like that. Then next one. A dividend of 100 million is to be paid in June. So we have dividends. We have some dividends to pay. The dividends of 100 million will be paid in the month of June, 100,000. 100,000 there. Then we have been told also there is a delay of 1 month in the payment of overheads and wages. Let us start with wages. So najua wages za March zinalipwa April because there is a delay. So wages za that period ni ngapi? So wages za March ni 100,000. I just put here 100,000. Right? 100,000 tunalipa April. Za April zinalipwa May 72,000. Na za May zinalipwa June. We are talking about 54,000. Now, after the wages, we go to the overheads. Now, overheads nimeona pale tumepewa production, administrative, and selling and distribution. And because it is the same terms, I'm just going to be doing my summation for March because the March ndio zinalipwa April. So you just take 40 plus 27 plus 18. This translates to 85,000. Right? Then the next one will be, I can see it is for April will be paid in May, 45 plus 24 plus 13, getting 82,000. Then the last one will be 36 plus 25, right, plus 11. You are getting 72,000. What am I supposed to be getting here at the end of the day? I'm supposed to be getting the closing balance. The closing balances. Umemalizana analysis yako. So let me start with the first month of April. So I just need to take 440, 0.75 minus 100,000, right? Minus 13,200 minus 100,000 minus 85. 100,000 minus 85,000. I'm getting 141,875. Then remember the closing for the month of April become the opening cash balance for the month of May. So if that anakuja tunaeka hapa 141,875. So I just add with the other revenues plus 349,820 plus 125,000, getting 616 here, 616,695. Then we subtract 135,000 minus 150,000 minus 10,500 minus 72,000 minus 82,000. Here I'm getting 167, 195. Then unaivuruga unaileta hapa 167, we have 195 plus 350, 820. Here we are getting 518, 518,015 right? Minus 90,000, minus 10,800, right? Minus 100,000, minus 54,000, minus 72,000. We are getting 191, 215. 191, 215. Any question? Any question? Sasa ukiangalia past paper vizuri, zile za kitambo kabisa, you'll be able to know that this question was tested somewhere. The way it is. Hii swali walitoa tu May 2015 question 5D. Kienda pale utaipata tu the way it is. Niliwaambia kasi nebo ina time ya kutest new question. May 2015, question number 5B, walitoa tu hiyo swali hapo directly, wakakuletea December 2021. That is how they normally do, right? So kama tutapata hii past paper, we'll be able to share with you for revision purposes, That is how they do. The same term, everything, the way the question is, the figures, baka hizi cells, they are the same. Everything the same. Hata hizo receipts zenye utapata hapo utapata hizi. So that is why I say, kindly let us focus on the doing our revision thoroughly. Now, I just want to look on the third. Let us look on the third type of budgets. In assignments, you have assignment hapo. So the third one might be having a lot of questions which we have to be doing. So in this case, when I look on the number 3, we are discussing about the flexible. Let me talk about fixed and flexible budgets. Right? So that we can be able to understand. When I hear about a fixed budget, I'm supposed to be understanding that this budget is normally prepared at the beginning of the accounting period. It is normally prepared at the beginning of the accounting period. That is a fixed budget. And why is it normally prepared at the beginning of the accounting period? We are saying that the main aim of the budgeting is to assess the performance of the management. And this can only be achieved when the budget units are equal to the actual units produced. But when you look on the fixed budget, basically, we are saying that it is basically needs to be assisting us to show for showing us the expected performance at the accounting periods to show the expected performance. Let me just read there because I will be able to share the notes. So what I know very well is that the number of the units to be produced is unknown, and therefore the actual production may be different from the expected production. So every time we are going to be looking at the fixed budget, it means we are going to be coming up with the estimates. These are the estimates that we are going to be doing, and we are going to be working very hard. When you are doing the standard costing, we are going to be analyzing how are we supposed to be making sure that the budgets which are basically set in place, they can be achieved if we put a small effort or concentration in achieving them. Now, it is normally prepared at the beginning, but what happens to the flexible budgets? We are saying that it is the budget that is normally drawn at the end of the accounting period to adjust the budgeted units to match the actual production, right? I'm just saying this one, it is normally prepared, it is prepared at the end of the period, right? At the end of the period, to adjust the budgeted units, to adjust the budgeted units, to adjust the budgeted units to match the actual units. So this is the thing that even as a student, I'm supposed to be understanding. Moja na prepare before the accounting period commences. That is the fixed budget. But this one, it is normally prepared at the end of the accounting period. What do you think is the main reason? We just want to motivate the employees to be, or to make sure that they see they can be able to match their expected performance. So in this case, the reason is we are saying that when we are going to be calculating the flexible budget, we normally use something called flexing ratio. Flexing ratio normally assists you to calculate. It normally assists you to calculate the flexible budget. How do you normally get our flexible ratio? We normally take the actual units, you divide by budgeted units. You divide by budgeted units. For you to understand this, I just want to do an illustration for you to understand how you should be doing your flexing. Just look on November 2017. Question number 5A. Kuna swali pale, right, ya flexing. Nafikiri litatiza wanafunzi kidogo sana. So we are going to be applying the formula to see how we supposed to be flexing the budget to match the actual performance. And how do we normally analyze the budget? Because when you look on the variants which are going to be existing within this, right? When we look on the variants, they are supposed to be investigated. Those are the things also we are going to be looking on the analysis of the variance analysis. Now, when we look on the aspect or the key thing which we are supposed to be noted down here, we are saying NB. Before we go to that illustration, we should be saying the fixed costs. The fixed costs are left. The fixed costs are normally left intact. The fixed costs are normally left intact since the number of units produced. Since the number of units produced does not, the number of units produced does not affect the fixed cost, does not affect the fixed. The number of the units produced does not, so you are not supposed to flex the fixed budgets, the fixed cost, sorry. Don't flex the fixed costs in any question that utaziekanga to the way they are. So wacha kwanza tuende kwa hii swali. Let us go to that period and we see what we are required to do. Let us go there. (2017) question 5A, November. Good. Who is reading for us for this? I can see Mary. Mary, can you read for us, please? Go on.
5A.
Yes.
Megspar Limited manufactures a single product branded WYE. The following data relates to its operation for the month of October 2017. We have the budget and the actual, sales, production, sales, direct materials, direct labor, fixed overheads, net income. Required, a flexed budget for the month of October 2017 for the actual sales of 58,000 units.
Very good. I can see. Thank you, Mary. You can see we have been told that our actual sales of the actual sales will be 58,000. But when I look on the sales budget in this case, we are being given 60,000, right? So when I'm calculating the flexing ratio, it means I'm just going to be taking 58,000 to divide by 60,000. In this case, I will be able to get my flexing ratio. And then I will be able to flex the income statement given in the question. So in this case, when you're going to your analysis, this is what you're supposed to be writing. This should be your analysis. I just need to say, let me have my budgeted issues here. Right, I write there budgeted. Here we talk about flexible budget. Then we compare it with the actual budget. We compare it with the actual budget. Then here we are going to be having variance. We're going to be having variance there. Good. So in this case, I just want to be very clever because already we said, let's first calculate our flexing ratio. And we have said to get our flexing ratio, just take the number of units, 50,000, you divide by budgeted. How much are we getting here? So that we can get our flexing ratio. 58,000 divided by 60,000. And I can see I'm getting 0.967. That will be my flexing ratio. And I'm going to be starting with my cells. The budgeted cells given in the question, they have given me the budgeted cells. They have given me 840,000. I multiply with the flexing ratio. So 840,000, I multiply by 0.967. I'm getting 812, right? 280. 812, 880, right? The actual given in the question is 823, 600, right? To do your variance, you're going to be now looking on the flexible budget. Remember, your flexible budget is normally prepared at the end. You compare with the actual budget of yours, and then we determine our variance. So in this case, I just say, I was determined to sell 812, 280, but actual sense, I sold 823, 600. Am I happy? You say yes. I sold more than what I budgeted, right? So what is the difference? So it's 12 minus 823, 600. Here I get 11,320. We normally call it favorable. Unaekanga F under the variance analysis. This is favorable. It means I'm very happy. I'm very happy I sold more than what I budgeted. Let us less our costs. Right? Let us less our costs. And we are going to be starting with the direct material. Remember, this was the revenue. That is why we say this is favorable. But what about the aspect of cost? Let us see. Under the cost, we budgeted to spend 240,000. But the flexible of ours, I take 240 multiplied by our ratio. So 240,000 times 0.967. We are getting 232,080. 232,080. The actual budget of ours will be how much? 246. Am I happy? You say no. This is the cost. I went to the market. I was budgeting to spend 232,000. I spent 246. I spent more than what I budgeted. So in this case, I just take the difference of 246,000. Niseme, I'm not happy today, right? I'm not happy today because I spent more by 13,920. You say that is normally called adverse. That is called adverse. I'm not happy. I'm not happy. After the direct material, we go to direct labor. We go to direct labor. Under the direct labor, I can see we have 300,000. When you multiply by the flexing ratio, right, 0.967, I get 290, 100, right? The actual budget of yours should be how much? Just tell me, the actual budget given by the examiner is 288,000. I'm happy today. I went in the market carrying, I budgeted to spend 290, but there is a reduction in inflation, you see. I spent 288. I'm very happy, 288,000. I get 2,100. We should be favorable. We should be favorable. Now, let us go to the fixed costs. Hapa ndio nimesema kuna NB. The fixed cost should be left intact. So ukiandika tu hapo 135, you don't flex. Nakuja hapo kwa flexible una transfer to 135,000. Then when you go to the actual, you copy your actual of 140. There is a variance of 5,000. which is also adverse. So in this case, we are being told to get our profit, which we have already done that. So get your profit now. That is how you get your marks, right? Get your profit. Now imagine, examiner amekusaidia. The profit for the budget I'm not calculating, equivalent to 165,000. You don't need to calculate it. And even for the actual is given. For the actual is 149,600. Right? What about for the flexible budget? I just need to calculate it. 812, 280 minus 232, 080 minus 290, 100 minus 135,000. And I'm getting 155, 100. Wewe ukiangalia profit yako, nilikuwa nimebudget kupata 155, 100. Nikapata 149. I'm not happy. What is the variance? 149, 600. Hapa napata 5,500. Which is adverse. So, na sasa mwanafunzi mwingine ataniuliza, what if I'm not using this need to be a easy? Is a variance. Nitapata aje? Nitakwambia already ikiwa favorable unajua back of your mind. Because in variance analysis we don't use negative or positives. I just say this is positive, this is negative, positive, negative. So in this case it will be 11,320 minus 13,920, right? 13,920. Plus 2,100 minus 5,000. Yes, I'm getting 5,500, which is adverse. That is how you work on those kind of questions. E was part of the questions because the flexible budget examiner anaitarget sana na anaifanya in a different forms. Hebu tuangalie another different form because he is already done. Hiyo ina kazi ingine unless there is a question. Ina kazi ingine. Tuangalie swali ingine. Imekwisha kabisa. That is done and dusted. Then there is another question here. They brought this year. Let me check the year. They were able to focus on this question. Let me check. That is okay for flexible budgets. I don't know whether you have another question. No, I think we have done it well. I just want to do a last question now before we conclude this topic. This topic is the question. So for those who have missed it, we are sorry for them. Now, if we do angalia kaswali ka mwisho before tukalale, May 2021. Kuna kaswali kako pale, May 2021, question 2B. Tujikumbushe chenye tumesoma. May 2021, question 2B. May 2021, question 2B. Hebu tuangalie kaswali kako hapo. There is a question there. May 2021. The Resia is ready for us. So May 2021. Swali kako hapa tujikumbushe what we have already learned. Question B, zigzag.
Okay. Zigzag Limited prepared the following budget for the first 5 months of the year 2020. We are given months sales budget in units. January, we have 10,800. In February, 15,600. In March, 12,200. April, 10,400. And May, 9,800. Additional information, inventory of finished goods at the end of every month is to be equal to 25% of sales estimate for the next month. On 1st January 2020, there were 2,700 units of the product on hand. There is no work in progress at the end of any month. The selling price per unit was estimated to be 450 shillings per unit. Each unit of the product requires 2 types of material in the following quantities. Material A, we need 4 kgs, material B, 5 kgs. The closing stock of materials is equal to half of the requirements of the next month's production. Required for the month of February, March, and April, prepare sales budget, production budget, material usage budget in units.
Very good. I can see we have around 15 marks to work on. And I can see that this is the thing that we did under the function budgets. And we just want to do, to be able to determine how can we be able to calculate this kind of question when we come across it in any exam. Now, I can see that the first thing that I have to work on, examiner is talking about the preparations of sales budgets. And we said to get the sales budgets, sales, we are going to be taking the unit sold, we multiply by the selling price. The selling price. Senior. And I can see here, we are discussing about only 3 months. Examiner ameniambia, we calculate for Feb, March, and April. Right? Let us start with sales units. Sales units ni ngapi? Nimepewa for those months. The first one will be 15,600. Right? The other one will be 12,200. Then the last one we are being given 10,400. This one we are going to be multiplying it by the selling price given under the additional information. So the selling price given we have, let me check. So the selling price is given as 450. 450. 450. So how much is this? Imagine tu namna hiyo nishapata. Namna hiyo nimepata. So in this case it will be 15,600 times 450. Getting 20,000. The second one will be 12,200 times 450. Getting 5490, right? Then we have 10,400 times 450, getting 46,80,000. 46,80,000. Hiyo tumemalizana. Number 2, examiner is asking you about production. He's asking you about the production budget. We said to get our production budgets, we need to be taking our sales plus closing stock minus opening stock, right? Minus the opening stock. So in this case, let us analyze the question, the full of it, and then we shall be able to trim as per the requirements of the examiner. So we have Jan, tuko na Feb, uko na March, uko na April. Nafikiri swali inakaa namna hiyo. Units, the sales units of ours, for January we are being given 10,800. Now for February, we are being given 15,600. The next one we are being given how much? 12,200. Right, 12,200. We have 10,400. Nimeandika vizuri kweli. January, February, March, April. Do we have May? Yes, we have our May. So May tumepewa ngapi? May pale tumepewa 9,800. Kuna mtu anashangaa mbona naandika hizo zote. Then we add back our closing stock. Then we less our opening stock. Kuna additional information on inasema inventory of finished goods at the end of every month is equal to 25% of the sales estimate for the next month. So in this case, it means here, right? We are talking about 25% of the sales of the next month. So kupata za January, it will be 0.25 times 15,600. Hapa napata that 900. Right? Then, nikitaka kupata za February, nimeambiwa ni 25% of the next month. So it will be 0.25 times 12,200. Hapa napata that 50. Right? Nikitaka kupata za March, nachukua 25% of sales za April. 0.25 times 10,400. Pale napata 2,600. Then nikitaka kupata for the next one, 25% of 10,400. I'm getting 2,600. Hii wachana nayo, hata tuna haja nayo. Then examiner alikupea vizuri. The opening stock for the month of the finished goods, alitupea under the additional information too, alitupea 2,700. Kwa nini? Ametupea hii peke yake, hizi zingine tutatoa wapi? If the closing stock for the month of January was 3,900, then will be the opening for the month of February. Hapo ananiambia hapo ni 3,900 mwalimu. I think hapo tuko pamoja. Then also najua the closing stock for the month of February become the opening for the month of March, 350. Right? Then the closing stock for the month of March becomes the opening for the month of April. Right? Because the opening for the month of April.
It's 24.50.
Sorry?
For April is 24.50.
24.50, yes. 24.50, because I'm supposed to be taking 0.25 times 9,800. Getting 24.50 correct. Now, in this case, that's the zingine unaachana nazo. Unaniambia tu mwalimu niko focus na hizi tatu tu, ndio examiner anahitaji. Only the three. So in this case, I just say 15,600 plus 30,50 minus 3,900. Hapa napata 14,750. Right? 12,200 plus 2,600 minus 30,50. I'm getting 11,750. Then the last one will be 10,400 plus 24,50 minus 2,600. Getting 10,250. Right? 10,250. These are the units produced. Those are the units produced. There's another requirement there tatu, where we are discussing about material usage. Material usage budget. So, hizi material tunatumia zina produce nini? Unarudi pale kwa swali. Unapata tuna produce two things here. We are producing A and B. Components, products, sorry. A and B. So in this case, nakuja hapa nasema, right? The material produced, right? The material produced of ours for the month of Feb, March, and April. What do we have? Nakuja hapa naniambia tuko na 14,750. The other one we have 11,750. Then the last one we have 10,250. Right? Ziko namna hiyo. So ukiangalia component A, right, requires 4 kgs. So hapa na multiply by 4. Kwanza na multiply by 4 namna hiyo. Napata for A. Napata for A. So it will be 14,750, right? 14,750 times 4. We are getting 59,000 for the first one. Then the other one will be for the month of March to require how much? Times 4, getting 47,000. Then the last one will be 10,250 times 4, getting 41,000. Ukienda kwa B naona wamesema we use 5 kgs. So sinabadilisha tu hapo unaweka 5 kgs unapata huko. So 14,750 times 5. Hapo unapata 73,750. Right? 11,750 times 5, getting 58,750. Then 10,250 times 5, getting 51,250. How much is this in kgs? how much in that in kg. So let me start with the second one, plus 58, 750, right? Plus 73, 750. Right, how much am I getting? I'm getting 183, 750. Then we have 59,000 plus 47,000 plus 41,000. Getting 147,000 kgs. Those are the things that we're supposed to be getting there. One is the 3,750, 147,000 kgs. Those are the things that we're supposed to be getting there. And once you understand them, then you are good to go. You are good to go. Any question? Any question? I just want to wish you good night. There is a question which I want to be, there is a question that I want to be sharing with you later regarding to our flexible budgets, because I know that the flexible budget is mostly tested. So I'll be able to share with you those questions, and then we'll be able to know whether you have already understood. But if we will not be able to, they are not part of the question in your link. They are not part of that link. They are past 2015, they are 2014 somewhere. So once we understand those questions, then I think we're not going to be having any challenge of the flexible budgets. So I want us to stop at that point. Wish you good night. See you next time. Bye-bye.